Okay, guys, so Cardano's ADA has had a bit of a nosedive. From Saturday into Sunday here, we did see an 8.66% drop. This is kind of in line with what we were talking about in the video that we put out on Friday, I believe it was, or might have been, in fact, been Saturday, where we were looking for rejection from our 200 exponential moving average, right? So we were seeing weakness up into these high areas. We did see a little bit of an additional push higher than 75.76 cents. But ultimately, it did kind of hit that resistance, it hit that wall, and we did see the market pull back. Not just, Cardano's ADA, but also, Bitcoin, the wider kind of market. We did see this drop right here. Okay, so this is kind of expected. It was kind of in line. We were talking about short positions up here. I didn't actually manage to get the time to enter into any trades myself on this one. But, if you guys were paying attention, hopefully you guys made some money on the back of this move right here. Now, with this most recent move to the downside, we have now had a little bit of a push over the last few hours. So basically 1900 hours, I should say, last night, UTC up to basically 0700 hours this morning. This is a 4.07% move, finding resistance on the 50 exponential moving average at the moment. This was a previous area of support that we lost, and it, to me, looked like it was coming in as resistance, but we are potentially going to close a position above this. This basically means that this area of previous support resistance is no longer really acting as support and resistance anymore. I'll leave it there for now, but it's an interesting one. This was previously 71.11 to 71.84 cents, but it's no longer really valid. But I'll leave it there just for reference a little bit longer before we remove it from the charts. Now, the next kind of moves here for ADA are going to be very, very interesting. I'm just going to run this down to a 5-minute time frame just for a second here. As what I want to do is I want to check the structures in which have actually been forming here with this little move, right? So we can see that it's three waves. You can see here that this is also kind of similar kind of structure. Impulsive, it doesn't actually meet those impulsive requirements. So it's not impulsive to the upside here on the 5-minute time frame or on the hourly time frame. Any of the internal workings, they don't contribute kind of a bigger, broader kind of trend to the upside. So it's very, very corrective. Now, with this, minimum expectations have already been met by the looks of this. So from our swing low to our swing high to a correction to another move up, our minimum expectations have been met. Okay, so as we kind of bring this back to our 1-hour time frame, and as we're coming up against this resistance right here, it's important to note that all of this is still a very corrective pattern. It still meets the requirements, or still has the ability, I should say, to push up a little bit further. I'll show you what the kind of possibility is, although I believe it's still likely, less likely to be something that we see. It would be a push out towards 72.93 to 73.58. Personally, I don't see it happening, but it is the bullish case here is for another push higher, just above the 50 SMA, that's the yellow line, and out towards the 200 exponential moving average, the EMA, the white line coming through the chart there. Now, at the moment, though, finding resistance here off the 50 EMA, I would expect us to move back down. Previous support around the 71.11 could be something that we see. So let me show you by drawing a few lines on the chart. What am I seeing? Well, I'm thinking that there's the possibility of something like this, but there's a low possibility of it. The only way that this plays out, though, is if this is an A wave structure, we come back down to support and then we push up into that. Okay, so ultimately, I'm looking for a bit of a rejection from the 50 EMA. And if we find support down at around 71.1, then we could potentially be looking for the long position out in towards kind of 72.9. So how would I be playing this? Well, we've got two options, right? We can do a really tight kind of short position here to this area. So we could be looking for something in around 1.55 risk reward ratio. Ultimately, we go short on the market at around 71.96 with stop loss at 72.52, and we take profit at 71.09, for example, right? Although I believe that's not the one that's realistically going to play out, or more specifically, I don't think it's necessarily worth doing because I think it's going to be low profit. You'd have to be high leverage, and I don't like doing that anyway. So instead, what I would be looking for here would be looking to see if we turn support in here, stop loss lower than this previous swing low that we had, okay, and then look to target out that slightly higher range there. This gives us a 1.9 1.94 risk reward ratio and is one that I would be more inclined to take. So I would be looking for kind of waiting for the retracement, looking to see if support does in fact come in at around 71 cents, and then look for a long position, right? Entry at around 71 and stop loss at around 70 cents with a take profit at around 72.9. This gives us a 1.94 risk reward ratio, right? So that would be more the approach that I would be looking for here, rather than one that is going to be kind of looking to go short here and then go long. I think the short, it is possible for sure. I just think it's going to be low profit and you'd have to go higher leverage to kind of make it more meaningful. And in doing so, you open yourselves up to more risk. And yeah, for me, that just, it doesn't make sense. So I'm not going to do that, but I do think the long position here is a possibility. So I want to keep a close eye on it. Now, the problem that I do have though, is that although this would be a significant bounce to the upside, we would be looking without any leverage, something into the range of around 2.5%. It is going to be deemed, a necessary structure of an A, B, and C, and I do think we are likely to move on down. Now, one of the bullish things I was monitoring and I put down in the Discord over the weekend and yesterday was this idea of moving out to 42 cents, right? And I can kind of rule that out as we were moving out here. But with our breaking above 77 cents, I can kind of say that that's a low probability. And one of the things that I would be looking at now would be the idea that what we have going on is more of a W, X, and Y pattern to finish this pattern off, and then we get into this bigger macro piece at a slightly later date, which would be more of an ABC, go A, B, and then C, and we move out to that later. Okay, so hopefully that helps visualize it just a little bit. I know it's a lot of lines on the chart. There's lots of kind of noise, talking. Maybe it doesn't make a lot of sense to you guys. Maybe it does. If you're not familiar, you can check out the course that I did on Elliott Wave, which basically explains why all of these things and how they happen, or why these things are most likely going to happen. There's a link in the description down below to that. But if you do join us in our free Discord server, you can grab yourself a 50% off coupon code and actually get 50% off the courses, right? And that's all the courses. That's not just Elliott Wave. If you're interested in smart money, portfolio building or risk management, all of those courses are available over at 𝗕𝗘𝗪𝗀𝗀𝗀, linked in the description down below. And there's discount codes in our free Discord server down below. Now, if I were to be trading this, of course, I'm going to be trading using something like 𝗕𝗘𝗪𝗀𝗀𝗀. Those are my two go-to exchanges, but there are a few others that are coming up, like 𝗕𝗏𝗀𝗡𝟏, which obviously is a non-KYC exchange, a lot like Blowfin. There's lots of different options, lots of different ways to kind of choose how you want to kind of trade. Personally, my approach to this has always been have as many exchanges as you possibly can, because when kind of things get really crazy in the thick of a bull market, it's actually really hard to get onto these exchanges. There's like a limited amount of bandwidth with millions of people trying to sign on all at the same time, all trying to trade their assets. It becomes quite hectic and it's really quite difficult to actually get online onto one of these exchanges. So the best kind of route that I've always found is to basically sign up to as many of these exchanges as possible. Even if you're not using them right away, having the account is absolutely critical. So do check out all the links in the description below. If you use the links in the description or down in the Discord server for all of the links that we have on these exchanges, then it does actually open up different areas of our free Discord server to you guys as well, where you can where we document our actual moves. So if you want to know what I'm trading actively, lively, then of course you want to keep in mind that if you do use one of those links in the description, you're going to get access to that information completely for free. All you have to do is actively use the account you signed up with, to basically get access, right? So you'll see my entries, my exits, my stop losses, my leverage, my risk reward ratios. All of that information is documented down in the Discord server, accessed by people who are using the exchanges that we have links for, right? All down in the description below. So worth checking it out. So this will be my approach. As you can see here, it's trying to fight above that 50 exponential moving average. I'm not so sure about that though. So taking a look here, we are overbought on our stochastic RSI. Okay, so we are looking for a bit of a shift potentially here. So, it is still showing some signs of maybe staying a little bit higher for a little bit longer. If it does, then, that's fine. We might move up into these higher ranges. If it does move up into these higher ranges without first falling down, we will be looking to short from up here anyway. Stop loss above the 200 exponential. And of course, we'll be targeting back down here again, looking for at least 1.5 on the risk reward ratio. So ultimately, I'm not too concerned whether or not we enter the long here or whether we enter the short at the higher side. So if it does break into this range at the top here, this is going to be a prime place for kind of going short on the market. And it's no coincidence, guys, that this area on those fib levels, by the way, that we measured, the 1 to the 1.236, happens to coincide with this previous support area that can turn into resistance. Okay, so all of these structures, they are all kind of interconnected depending on how you want to look at the market, whether you're looking at the market through the lens of support resistance, price analysis, Elliott wave, smart money concepts. You tend to find that they all kind of convene together at these kind of areas, just like this. So if we do push up here, this is going to be a prime shorting area, shorting between kind of 72.9 to 73.5, then obviously stop loss above the 200 exponential, and then we'll be looking to come down potentially lower than 69 cents. So it could be a great short opportunity if we do go for that without first dropping down into this long position. So all in all, that's interesting. And if we turn off the stochastic RSI, bring in the relative strength index, you can see here still upward momentum on the 1 hour time frame. Very interesting. MACD histogram growing, but it isn't showing us any bullish divergences just yet. Now, in an ideal world, what we want is we want this histogram to grow higher than the one previous, whilst the price stays lower, and that will give us the bullish divergence that we're looking for. At the moment, we haven't got any concerns around this, say concerns or any kind of hope around it. But for the most part, we're going to keep a close eye on how all of that plays out. But all in all, that's kind of how I'm looking at it. If we do in fact get rejected here, move down, then we'll go long into this previous area up here, 1 to the 1.236, and of course the previous support levels to turn it into resistance. And we will be looking to go short here for riding that next wave to the downside. Okay, let's roll this up into a daily time frame then. Okay, because on this daily time frame, things are, very much like what we've just been discussing, right? We had a pretty interesting move to the downside, and we are almost ready for a bit of a lift. Okay, so we are obviously lower than the 200 daily exponential moving average. Let me just get rid of that, right? And so we can kind of see here, this is the area that we are thinking about the price eventually moving out towards, which is essentially 82 to 85 cents. And it is a three-wave pattern, okay? So what we have here is the idea of a three-wave pattern doing this, right? But this is a part of a potential bigger break to the upside. And it might actually be that we find an impulsive breakout from here for Cardano. The reason is that we already have this kind of three-wave pattern here, and this is just another three-wave pattern to this correction level. Okay, so although it's kind of a bit boring, it's kind of been trading around, this is a very corrective pattern that we've seen. We obviously do have this kind of sell war around $1.06 to $1.14. Okay, and we obviously got rejected quite aggressively here. And the next thing we're going to be looking for is a clean break of this. Now, as it sits right at this moment in time, it will be very interesting over the next few weeks to see if Cardano can rally out towards 135 to 165. Okay, that's going to be basically this little range right up here. Okay, I'm going to go draw it in. This is between 1 and 1.236 again on those fib scales, in line with three-wave patterns, which is what I'm expecting to kind of see. Now, it's possible, of course, that maybe there's some kind of diagonal-based pattern. Maybe there's something else going on here. I think there's a lot of different possibilities at this stage. The stochastic RSI being down here in the oversold area still has room to continue going down a little bit if it needed to, but reversing from here is something we saw in February. It's what we saw back in December. It's what we saw, in November and so forth, right? So it's very interesting kind of time for Cardano. The last time it was here, we did see a significant surge. The time before that, we also saw a surge. And so we want to kind of bear in mind that although it's not related to the price action, the stochastic RSI is in a reasonable position. On the relative strength index, it is slightly lower than 50. Okay, so this is still bearish territory on the RSI. So we need to get above 50 on that. We'll see how that plays out. The MACD histogram here does show that there is, in fact, some weakness within our price action, but there's also some strength. This is basically an indecisive market. Now, one of the things I would say, and I've been saying for a while, is that we do find ourselves even coming down into lower lows here on the price action, but we have higher lows on the MACD histogram. This is a bullish sign, not a bearish sign. This shows that actually the market is getting weaker as it goes down, indicating that the bulls are taking more control of the situation. This is also something that we could see when we actually had that breakout of our histogram pattern right here. Okay, so this was an indication that buyers took control of that situation. And I do think that we're likely to see that continue. Okay, so we've had a good correction. We came down into those lows as expected, and we can now start thinking about the next kind of moves to the upside, in my opinion. Okay, so as we kind of think about this, our accumulation still sits anything lower than basically 53 cents, but I did kind of high that up towards 73. Anything lower than 73 cents to me looks like a great accumulation zone as we kind of zoom out of this just a little bit to kind of take stock of the bigger, broader situation. So for ADA here, we are tracking a diagonal-based pattern into our C wave. Now, is that a guarantee? No, because nothing ever is guaranteed in the world of crypto. Okay, this can, of course, be a very prolonged bearish market, and we've been in it since 2021, right? There's still that wild card possibility of something looking like this, right? And we're just going to be going down to less than 10 cents at some point in the future, right? That's what the bears will tell you. However, and considering all of everything that has been going on, the way that we predicted 22 cents, a full year and a half in advance, and how we have these kind of patterns playing out right now, I believe that we are on track for this C wave higher, where we are looking for a move out towards kind of $5.27 to $12.91 on the conservative side. Okay. And of course, there's the bullish side between $38 and $100, right? $130, which is insanity because I don't think that's likely to happen. But it is what the technical analysis is pointing towards, right? So for like all the clickbaity titles and all that kind of stuff, you're going to see $38, you're going to see $130 because technically those are things are possible. However, I think more conservatively, between $5 and $12 is most probable. And then, of course, if we want to be super, super cautious, we actually have between $3.09 and $4.67. Now, the reason for this extra low one is the potential for a contracting diagonal-based pattern. Okay, I have basically got here a couple of different scenarios. We have a contracting diagonal, we have an ending diagonal, and then we have an expanding diagonal. Okay, these are the three kind of options I'm monitoring at the minute. There's also a wildcard possibility of an impulsive run, and all we're doing is nesting in structures, which would be, again, more inclined to be on the higher side than the lower side. So as we kind of think about this, right, we have previous kind of support and resistance or resistance areas coming in between $2.26 and $3.10. And then we have kind of that lower side between $3.09 and $4.67, the kind of conservative medium range between $5 and $12, and then obviously super bullish at $38 to $130. How does this play out? Well, we're looking at a diagonal-based pattern. Okay, so a 1, wave 2, a wave 3, a wave 4, a wave 5. It will look something like this. It'll be very choppy. And one of the things that you'll notice here is there's going to be a lot of corrections, right? So inside our wave 1, you will see that we had the first wave up, we had the crash, then we had another wave, then we had a crash, then we'll have another wave, we'll have a crash, we'll have another wave, we'll have a crash, right? It'll crash down here, and then we'll have another wave, then we'll have another crash, and it's going to be full of these emotional roller coaster of a ride, right? It's going to be up, down, up, down, up, down. It's going to be like Cardano's ADA is having a heart attack, right? That's what it's going to look like, because it is going to be testing people's patience no end, right? This is not the most ideal pattern. If we take a look at 2021, it was more impulsive, right? It was, hey, straight up, a little move to the downside, straight back up again, little move to the downside, straight back up again. And this pattern is not that at all. So we want to be aware that these kind of patterns, they form in, your ending diagonals or your expanding and contracting. They happen in a wave C, a wave 5, or a wave 1, or potentially even a wave A. But in this particular case, it is not relevant. So we are just tracking this within a wave C pattern. Now, if we do end up with a nice impulsive run, which still it falls inside an ABC structure, which is a must, then we are looking for 925 to be kind of the 1.618 for the ending diagonal scenario. And if we can't hit that within an ABC structure, well, in which case we are, of course, going to be more likely to be tracking a expanding or contracting diagonal. Okay, so expect a lot of volatility for Cardano. That's ultimately the aim of the game here, is not to get shaken out of the market. It is going to be volatile. It's going to be testing your resolve, and the weak hands will, of course, get shaken out. But of course, it's just my thoughts and opinions on the data in the charts as I see it. What do you think? You can let me know in the comments down below, or join us in the free Discord server linked in the description. Guys, smash the like button if you found this useful and helpful and informative. Make sure to subscribe using the subscribe button down below. And if you haven't done so already, check out the latest Cardano news by clicking that video right there.